I hope I'm visible and I'm audible. I don't know if anyone can see me on the other side. I think the session has started now. I am just waiting to see some more people stream in. Um, Great. So I just like to get some confirmations that someone can see me. Okay, great. I think I am visible now. I think I'm fairly audible now as well. I'm sorry I had some issues with the internet. Um, so I'll just jump right to it. I think today's topic is accounting hacks for startups. Uh, Let me actually first start off by introducing CAXpert and what it does, because what we essentially do is basically accounting services. The reason I mentioned this at the beginning of this webinar is because I think a lot of people, when they think of their finances, when they think of the financial aspects, they're thinking about larger pictures in terms of funding, in terms of taxation, in terms of compliance costs, and so on and so forth. I think there's a real lacuna in terms of people understanding why accounting actually is really important, in the larger scheme of things, and basically when you're running a business. Um, I think essentially, I think if I were to mention one thing, accounting is the language of business. So basically when you are talking, when you are communicating between one individual and another, you use some mode of language, whether it is English, whether it is Hindi, or whether it is something else. When two businesses are talking, they essentially use their accounts to communicate. Internally, accounting helps you connect the dots. So I think for most of you who are running a business, a lot of times when you have a vendor with whom you need to understand, the history of transactions, or with a customer, you essentially exchange ledgers. So that you have a record of the transactions. You're not directly communicating or sending the 100 emails you may have exchanged with each other. You're basically sending out a ledger. So I think that gives you a good example of how accounting actually helps businesses communicate with each other. I think the other reason why accounting has become so important is because we're really moving towards the gig economy. I entered and I attended an event organized by the CFA Institute a couple of months ago, where we had Mr. Utpal Seth, who is the CEO of Rare Enterprises. That basically handles the investments for Mr. Rakesh Jhunjhunwala. And I think one of the things that he said is that when you think of investments, you got to think of the mega trends in the economy, like housing, like urbanization, and so on and so forth. And according to him, the next big trend in our economy, perhaps globally as well, is people moving towards the gig economy. Now, when we talk about moving towards the gig economy, we're essentially saying that people are not going to be hired full time for jobs, but they will be, outsourcing their services, to multiple businesses at the same time. So essentially, when you start doing that, you yourself become a business, and you need to start tracking your financial metrics, and how efficiently you are actually making your capital grow. And that is why accounting then becomes even more important. Uh, just to give you an example in terms of how many businesses are coming up every year, we have about 50,000 registered startups right now. That number is about growing by about 1,500 per year. So we have about 1,500 new startups coming online every year. We're expected to reach 1 lakh startups by 2024, according to some reports. So there are a lot of new businesses coming online. Now, coming, to why accounting and data entry per se is so important, why do you need to record everything? I think one of the key things that you need to understand is that in India, the business discontinuity rate is very high. That means out of 4 businesses, 1 business shuts down. Now, there could be multiple reasons for that. Maybe the product market fit was not there. Maybe, you miscalculated in terms of what the demand would be, and so on and so forth. But your numbers start telling you a story and a picture before you even realize what's actually going on in the business. And that all comes down to data entry and recording your transactions. Now, when you talk about accounting, a lot of people think about the immediate benefits, which is that it helps with GST, it helps with taxation, it helps you with your income tax, and so on and so forth. And of course, that is true. Accounting does help you with compliances. I mean, it forms a very strong base as far as compliances are concerned, but it essentially forms a very strong base as far as your entire financial management for your business is concerned. Um, you know. Essentially, there are three types of accounting. One is taxation, which is highly specialized. There's compliance, which is also specialized, and both can be used interchangeably in that sense. But the third type of accounting, which is managerial accounting, which is which is where a lot of small businesses slip up. They don't tend to realize that your accounting data is actually throwing up some serious insights into your business, and you are not being able to pull that out. The crux of what we're trying to do here today is probably give tips and tricks in terms of how a lot of the businesses that are logging in today, business owners, can actually maintain their accounts efficiently, and of course what they should be looking for in terms of drawing out information from their accounts. Um, now, people will say, why is accounting so challenging? Right? I mean, there are people who can undertake marketing for their own business, but they somehow can't seem to undertake, accounting. The reason is because when you first become entrepreneurs, and I think you essentially, and this has happened with us as well, you are exposed to multiple departments at the same time. You are managing the product, you are managing the service. Operationally, you're involved in the marketing aspect, you're probably involved in the hiring and the firing and the HR aspects as well. And accounting also requires your time, but it also requires a certain skill set and an understanding, which I think a lot of entrepreneurs cannot spend or afford to spend the kind of time to devote and really upgrade their skill sets in that area. Um, Secondly, I think a lot of people, again, I think comes back to a point that I made previously, that they understand accounting is related to taxation, it is related to income tax. It is related, it helps you with your GST filings every month or every quarter, if you are falling in that tax bracket. But they are not really understanding that their business is actually throwing out a lot of information, which if they analyze on a periodic basis, they will probably understand where they're going wrong operationally as well. I think just jumping straight to it, in terms of the hacks. What is a hack? A hack is basically a quick solution. Uh, but hopefully, what we will be discussing today will not be band-aid solutions. They will, we'll try and give you a deeper understanding in terms of, the key methods that will help you, get your accounts in order, and also in terms of, what information you need to extract from your accounts. Now, the information you need to extract from your accounts would differ from business to business. I mean, if I'm a manufacturing concern, the kind of data I will need to ensure efficiency in my business versus if I'm an e-commerce business versus if I'm a freelance digital marketing agency, the metrics that will probably dictate my profitability and my success, financial success, would differ greatly. So I think you really need to understand the financial metrics that will apply to your business as well. Now, in terms of methods to keep your accounts in order, I think one of the main things you need to do firstly is understand the financial year and the calendar. Now, this will sound like I'm contradicting myself because I am talking about managerial accounting, but at the same time, I think one of the first points I started off is with taxation. But I think what I'm really trying to say is that there is a cost associated with non-compliance, right? So that that's going to be a cost, that's going to be a cash outflow in terms of penalties and so on and so forth. So it's best to first know what is due when, right? And then you need to understand the penalties for non-filing on time, and of course how to handle those notices. I think again, this is not rocket science. Basically, for most businesses, you have of course income taxes at the end of the year, you have goods and services tax, and you have of course TDS filings. These are the basic taxes that would be applicable to you, and of course if you are in specialized businesses, there may be other taxes applicable to you as well. You also need to understand the process. And here again, you get in touch with a CA or an accountant. Most accountants who have about 5 to 6 years of work experience would know the TDS filing process, would know the GST filing process, would also understand the income tax filing process. They may not be able to do it for you, but they will understand the process. And therefore, you can, pick on their brains, understand what the process exactly is. I think, you know, beyond that, what you really need to get a handle on is documents management. And I think I cannot stress enough on that, because most times, especially with the businesses of today, there is so much data being thrown out. I think the best example I can give you is that if you were running a retail store, uh, you know 15 years ago, chances are that you were just a brick and mortar outlet. But now you are selling on Facebook, you are selling on possibly your own website, you are also selling through marketplaces like Amazon and Flipkart. You are handling logistics companies. You are handling clients maybe as far as the US. Basically, the world is in your hands as far as delivery of certain products might be concerned. So you really have a lot more data in your hand today than you did 15 years ago. And that data comes with a lot more complexities, so you need to be able to first store all that data. And I've seen when we first start handling clients for a lot of entrepreneurs, what we first notice is that a lot of them are actually just lost in the jumble of data. So how do you actually manage that, right? I think one of the easiest and best ways is to start maintaining a cloud account, whether it is something like a Dropbox or a Google Drive or even a OneDrive, where you start uploading all your expense bills, all your invoices that you've raised to your customers, and any your bank statements and so on and so forth, so that at least that becomes your data dump. You don't have to filter it, you don't have to do anything, but at least there's one place where your data is stored. The second thing that we think works really well are a lot of apps that are available. This is especially true for a lot of smaller businesses where the entrepreneur is basically making expenses mostly from his or her cell phone, or his or her debit card. Business debit cards, so on and so forth. There are apps like Expensify, Walnut. Walnut is great because it actually reads your SMS and then collates all that information to actually tell you what expense you have made over the last month. So there are a lot of apps available that can help you streamline all the data, or at least all the bills that your business is actually throwing out. um, Again, I think what we really need to do specifically is reconcile. Because your business is throwing out so much data. If I come back to the e-commerce business example, you have obviously this traditional reconciliation, which is bank statement reconciliation, where you reconcile what you have entered into your possibly Excel file or accounting software with the bank statements. But now you are not only doing that, you have obviously more payment avenues. Your payments are being made through Razorpay, PayPal, so on and so forth. So, your customers are paying you not just through a NEFT or through a check or through cash, but through other digital platforms as well. And of course, you are managing a whole lot of inventory as well, because you are again shipping globally and so on and so forth. So you need to undertake payment reconciliation. You need to understand how to undertake inventory reconciliation. And let me tell you, we obviously we're onboarding clients on a fairly regular basis, and even the smaller clients who come to us, who've basically been in existence or only done business for a few weeks or months, even their inventory reconciliation takes time, because as a business owner, when you are when you are importing or buying and then you're selling, I'm again sticking to the e-commerce example. Data gets through you or gets ahead of you very fast. So reconciliation is one way where you have things in order as on a certain date, and of course you need to do this reconciliation on a periodic basis to help you out. um, I think another thing that you really need to do well is learn how to invoice properly. And the reason I say this is because, of course, we've had this big change in terms of GST coming along, and it's it's really changed the way businesses really need to invoice. I mean, now as far as invoicing is concerned, you need to ensure that you have a GST number quoted on the invoice, the date is correct, the GST registered addresses are mentioned for yourself as well as your customers, and so on and so forth, the correct HSN code, the correct tax rate related to that HSN code or SAC code, and so on and so forth. Good invoicing practices also include, understanding how to put the correct invoicing number. Again, when we first onboard customers, there are so many customers, and pretty big ones, let me tell you, who are invoicing or putting the wrong invoice number. So they're not following an order. So for example, if you raise an invoice today, which is invoice number 1, and you raise an invoice tomorrow, that should be invoice number 2. And if on the third day, it should be invoice number 3, and so on and so forth. But for one reason or the other, a lot of clients don't end up following the correct order. Of course, there are no penalties for that, but in terms of tracking your own information, it does become a little more difficult. And of course, I think one of the best things you can do as far as invoicing is concerned is provide your clients with multiple payment options. We've actually seen businesses where multiple payment options actually help them get the funds a little faster. So if you are maybe just asking them to pay in cash, and tomorrow if you say that even a NEFT will do, or maybe you're sending them a payment link, the businesses are sometimes more inclined to just make an online payment as well, because it becomes easier. I think these are the things you sort of need to keep in mind when you are undertaking accounting for your business. I think another thing which a lot of businesses possibly don't think about, especially businesses that don't have an in-house accounting team, is having access to their own data. And this is something that plays a very critical role in terms of you having immediate access to what your business is doing. Possibly this is because traditionally, we were using a lot of desktop accounting softwares, and your freelance accountant came with his laptop, and did the data entry at his end. He just ran his queries by you, and then he would leave. And then if you want to know what's happened in terms of which customer owes you what, or any other acts, what your top expenses were, you either need to pull that out and manually calculate it yourself through some, or maybe maintain it on some Excel sheet separately, or call up your freelance accountant. But in today's day and age, there are so many, cloud accounting softwares that are easily accessible. Your freelance accountant doesn't even need to come to your office. He can be wherever he is. You can share your data with him. He can just punch in the numbers, and you have access to those numbers 24/7. I think some of the cloud accounting softwares that we definitely work with, Zoho Books and QuickBooks, but some of the other ones that are out there, such as Profit Books, Host Books, and Xero, etc., they work just as well. And I think there are also a lot of apps now that are coming to link, let's say, desktop accounting software such as Tally with mobile apps. So even for our clients, we end up doing accounting for them in Tally because the business might require it. Cloud accounting is not always the best solution. Sometimes desktop accounting software will work better for you, and but you still need access to those numbers, right? So we actually have partnerships with third-party vendors who actually link the Tally data directly to a client's mobile. So you don't need to keep calling your accountant, for each and every account that you probably need insights on. Now, I think one of the biggest questions you need to ask yourself, and not just go with what your accountant is telling you, is which accounting software is right for you. And that, let me tell you, will require some research from your side. And you need to be comfortable with that. I think by default, the default setting in India is, of course, Tally. I think it has about 75 to 80% of the market. When GST was implemented, they sold a whole host of Tally software in 2017. So it is it is the first suggestion that any accountant or CA will make to you in terms of maintaining your accounts. And don't get me wrong, there are a lot of benefits of having a desktop software. It is much faster to use than a cloud accounting software because it is not online, and so on and so forth. But it may not always be the correct option for you. Some of the things that would help you sort of zero in or maybe some questions that you need to ask yourself before you're choosing the accounting software is perhaps, what is your business type? Are you a manufacturing concern? Are you a trading concern? Are you a service based concern? I can tell you for a fact that for a lot of the trading concerns, such as the e-commerce sellers as well as the service-based businesses that we do accounting for, we have them on cloud accounting. Uh, and one of the reasons we do that is because we tend to deal with a lot of customers who are smaller in nature and they don't have a very large team. And that brings me to point number two, that you need to understand what your team size is. Do you have an in-house accountant who's going to be sitting and punching the numbers day in and day out for you? Is your business even does your business even require that kind of inputs as far as an accountant is concerned? If it doesn't and you don't have a full-time accountant, then you possibly, if you have a desktop software on some accountant's office and outside your office, you obviously don't have access to it. But if that same accountant actually undertook your accounting on, let's say, a cloud accounting software like QuickBooks, it would help you. Again, if you don't have an accountant, in your office, then who's raising your invoices? Chances are that you yourself are raising the invoices, or maybe, a member of your team. So if you have a cloud accounting software, it actually helps you raise the invoices directly from the cloud accounting software and then email it to your clients directly. Along with payment options linked to it. So it's in some sense, it's actually really quite useful and easy to use. I think another question you need to ask yourself is possibly security. I think this is counterintuitive, but when you have an accounting software that is stored on the desktop in one computer in an office, it's perhaps a lot easier to break into, and get the data out compared to, let's say, if something was on the cloud. Because when something's, essentially on the cloud, it has the advantage of being, hidden. I mean, unless someone is really out there looking to hack into a particular server, your data is fairly well stored. Um, I think another thing that, point as far as, maintaining your accounts well is concerned, and I think a lot of our clients face this problem, is payroll. You do have a team. It could be 5 members, it could be 20 members. You have to make payroll every week, every month. You need to give them a form 16 at the end of the year, and so on and so forth. So what do you do, right? I mean, especially if you don't have an in-house accounting team. Um, Again, there are a lot of great, SaaS solutions out there. I think a couple that we have definitely used or recommended to people before are Zoho Payroll and Great HR. Great HR has an integration with QuickBooks. Zoho Payroll, of course, has a integration with Zoho Books, and there are a couple more payroll apps. For which we tend to get mailers, but we're not sure how good or bad they are, so I won't be taking their names. But yeah, so I think it's about understanding that there are a lot of cloud solutions out there online that can be integrated as well, which works really well as far as cloud accounting is concerned. And maybe just going for a standard desktop software because an accountant is recommending that may not actually be the best option for your business. And I think, as far as invoicing is concerned, again, you can probably use, cloud invoicing solutions such as Invoicera and so on and so forth. There are a dime a dozen as far as online invoicing is concerned. So maybe, you need to sort of, figure these out. Of course, we'll be happy to, address any questions that are raised on the WEP platform. We tend to scan the community groups, frequently, and we'll be happy to address any questions that are raised there, regarding any software suggestions and so on and so forth. Now, coming to the second part of this live session, in terms of what businesses really need to be pulling out from their accounts and what their accounts should be highlighting. I think this, if we could probably, if we could address some questions there, I think we would have really helped some of the listeners, because it's really important to understand that the reason you're doing the data entry and you're going through the whole difficulty of maintaining that data, because getting an accountant, even if it's an outsourced accountant, to maintain that data for you is a task. Maintaining that paperwork is a task. It's I mean, I'm not going to lie to you. It does require some amount of effort. So what are the benefits, right? The benefits is that you get amazing analytics into your own business. I mean, we talk about analytics and data analytics being the next thing. Your business is throwing out so much data. If you just follow that data, if you understand those metrics, you know, you could be exponentially growing instead of growing incrementally. So if we start off with the financial metrics, I'm going to break this up into two aspects. One is the financial metrics, which really track the ultimate success of whether something worked or didn't work. We could possibly even call them key performance indicators. And we'll also be discussing operational metrics. So operational metrics are basically metrics that sort of track the efficiency of some of your business decisions. Eventually, if your operating metrics are good, it'll show up in your financial metrics. If we were to look at it in terms of top down, we start with financial metrics and we dig a little deeper and get into the operational metrics. So we're going to be discussing some very simple financial metrics today. The reason being, financial metrics for a business differs from business to business. Like I mentioned, if you're a manufacturing business, it'll be very different from a service-based business, and so on and so forth. So we've really just tried to create a general list. And of course, there are a whole host of financial metrics out there that can really put a perspective on whether this business that you are dealing in or part of is actually investable or not. But that would require possibly, a few more sessions. And it would probably defeat the purpose of, just taking gentle steps into understanding your accounts. So some of the basic financial metrics I think that you need to track is, of course, your sales growth, whether it is month on month, quarter on quarter, year on year. Your gross profit margins. This is really applicable to trading businesses as well as manufacturing businesses. Again, we'll be happy to share this through an infographic. Possibly we could post it on the WEP platform, and we would encourage users to maybe even drop in an email, their email over here. We'll be happy to email it, or they can get it directly from the WEP platform. Now, your gross profit margin is basically your sales less your cost of goods sold divided by your sales. This will essentially tell you that the immediate cost, minus your sales, whether that is even profitable or not. Typically, most businesses have a very decent gross profit margin. And once you remove all the administrative expenses and so on and so forth, you get your net profit. And your net profit divided by sales also gives you your net profit margin. Another thing that businesses really need to consider is the working capital requirements. Now your working capital requirements is nothing but your current assets less your current liabilities. What are current assets? Current assets are those assets that will basically mature in the next 1 year. So things like inventory that you might have, or outstanding payments that your customers need to give you. All those will possibly come to you, float to you within the next 1 year. And of course, then there is current liabilities, which are expenses that you are due to make, in the next 1 year. So it could be interest payments on loans that you have taken, or it could be payments that you have to give to your vendors as well. Now, working capital itself will, of course, tell you, whether it's positive, negative, so on and so forth. But how liquid you are as a business, how much money you actually have as a business, are probably covered by two other ratios, the current ratio and the quick ratio. Again, we'll be sharing all these details with you, through an infographic, possibly by Monday or Tuesday. So I will not get into the ratios too much over here, because I think, it probably just defeat the whole purpose. And I think another thing that businesses possibly need to consider is, what are fixed costs and what are variable costs. And again, I think these will probably give you a perspective. Once you start recording this, you'll realize that, let's say, rent, electricity, whether fixed costs are basically whether your business is running or not, you will be paying these. And perhaps not in times of COVID, because I think a lot of landlords and so on and so forth globally are making exceptions. But generally, whether your business is running or not, you will be paying rent, and so on and so forth. So what are your fixed costs? Sorry, what are your variable costs? I mean, once you get a handle on that, it will help you understand what your break-even point is. So when your revenues are equal to both your fixed costs and your variable costs, that's when you know that your business is ready to break even on a on a possibly on a per unit basis usually. Uh, I think for startups, I think a term that really gets thrown around is burn rate. So, essentially, burn rate is nothing but your estimated income less your estimated expenses. Typically, the burn rate, is really important because startups are spending more than they're earning, right? So they are basically drawing into the cash pool wherever that is coming from, funding, or whether they're bootstrapped and it's coming from the founder's savings and so on and so forth. So what is your runway then, right? So your runway is basically all the cash that you have right now divided by your burn rate. So I think if you look at Zomato, I think they were on a forum last year, I believe, and they said they have a 2-year runway. Which basically means that with the amount of cash they have in the business, they could comfortably manage their operations for 2 years without needing to, raise finances or funding again. Another, financial metric, which though I think actually is an operational metric, they tend to overlap. But I thought I'll just bring that up here, is customer acquisition cost. Again, the amount of money that you've spent, getting a customer, onboarding a customer, divided by the total number of customers that you've actually managed to get in a certain period will tell you your customer acquisition cost. And of course, another metric that is really important is the lifetime value of a customer, which is basically essentially what a customer pays you on a for every transaction, and the number of transactions that you think that customer will have with you over his or her lifetime. Now, businesses can actually get you know you can make or break a business based on the customer acquisition cost as well as the lifetime value of a customer. These two metrics is something that most businesses really need to get a handle on, and it is something that even with us, being an accounting firm, it is something that we've really had to work towards to understand, because like all other startups, we are a part of a dynamic environment where we're trying new things, and it becomes very difficult to track this particular metric. But it's very essential to break this down as well as you can and understand, because this really gives you an idea about what you're costing, and what the value of each customer actually is. um, I think another financial metric, which is an operating metric, which is the metric that any business needs to follow, is your cash. How much cash is your business generating, right? So, I mean, if I were to actually compare this to any other metric in the business, think of any other metric in the business as a speedometer in the car, right? So, your sales growth, your profit growth, net profit margins, whatever it is, right? But cash is like the gas tank, right? It is the petrol in your car. The day you run out of cash, you can't move. No matter how fast you were going before, no matter what your sales growth was, no matter what your net profit margins were, no matter what any other metric is, the day you run out of cash, you can't run your business, right? So I think one thing that you should definitely ask your accountant to probably provide you, periodically, every quarter, every month, perhaps every year, definitely every year, is cash flow statements. And then understand how to possibly read a cash flow statement. It is not very difficult. You just need a little bit of guidance. I think some amount of Googling will help you with that. And of course, like I said, the WEP platform, if you raise a question there, we'll be more than happy to answer it there. Once you understand the cash flow statement, you will really understand where the cash is, why your business is not being able to generate any cash. So we've had clients who have actually run a very profitable business. In terms of net profit margins, it's probably 20%, 25%, and they're really happy. But then they ask us, so where's the cash, right? And when you actually make a cash flow statement for them, they understand that, okay, the business is profitable, but it's not really generating a lot of cash. And there are multiple reasons why that might happen. And once you delve into those reasons, you actually understand your operational metrics a little better as well. I think, again, these financial metrics, like I said, are not exhaustive. This is a starting point. I think if you get your head around some of these financial metrics, you would definitely be moving in the right direction. As far as operating metrics are concerned, I think operating metrics, again, differ from business to business. Generally, for manufacturing and retailing types of businesses, inventory is more important. So things like, inventory turnover, average days to sell inventory, things like shrinkage, what is the sell through rate, so on and so forth. These metrics become very important. Obviously none of this would actually apply to a service based business. Unit costing, again, would become very very important for any business that deals with goods. Interest coverage ratio, your for specifically for retail firms, things like what are sales returns, what is the percentage of returning customers, are you being able to get customers who come back for more, what is your return on advertising expenditure, specifically for retail businesses that are online. There is so much advertising that happens, either through Google, Facebook, and all these other platforms. And of course, it actually ends up becoming a fairly big expense. But are you being able to generate the clicks? Are you being able to generate the revenue from these ad campaigns? That is something you definitely need to study. And let me tell you, all these things, operational metrics, will eventually show in your financial metrics. So if your ROA, your return on advertising expenditure is not good, eventually that will show up in your cash flow statement. So all this is, interlinked, like I said. For service-based businesses, I think for most service-based businesses, their employees are the largest cost center. The sales revenue per employee is a metric that definitely you can track. And I think a lot of things, I think one of the things you can definitely track are maintaining timesheets. Even for us as an accounting services firm, we tend to maintain timesheets in terms of how much time we're actually giving to a client. So a client that's actually giving us X may be getting Y or 2X or 3X the kind of work that they're actually paying us for. So it helps us get a perspective in terms of how much you're getting from each customer and how much you're actually giving to each customer. And it helps you also understand where the time is actually going. So something like basic research that your employees might undertake to get something done, to maybe for a digital marketing agency to understand how to get an ad campaign started on TikTok, or the changes that have happened in TikTok, and therefore recalibrating certain ad campaigns and so on and so forth. That requires time, and it'll tell you that okay, it's taken X person 5 hours to understand how to how to change all the ad campaigns in TikTok or Facebook or whatever it is. So I think these things really do help to put things in perspective. I think if you come back to point number one, which I said, which was basically when I stated that accounting is related to taxation, and a lot of people do think that it's related to taxation and forget about it. They don't think of the next level, which is the managerial accounting and the operational metrics and so on and so forth. But when it does come to taxation, I think most businesses are very keen to understand deductions. And so I'll just briefly try and give you some ideas in terms of where the deductions can actually take place. I think one of the places where you can start deductions is basically how you form your business. So if you're a private limited company versus an LLP, immediately the tax rates that are applicable to you are very different. If you're a LLP, you're paying a flat 30% tax rate, plus cess, and then you can't raise money. But with a private limited company, you can raise money, but then your tax rate's obviously much lower. There is no dividend distribution tax as far as private limited companies are concerned, and so on and so forth. So how you actually form your business does actually impact your the amount of tax you'll eventually end up paying. Smaller things that you can consider is that most people start off businesses literally from their homes, especially service-based businesses. So things like home office deductions. If you're going for meetings in your own car, you can actually charge the petrol expenses to the business. Try and give your GST number wherever possible. This is specifically, for online B2B websites and so on and so forth. When you are actually purchasing so many things, you may not even realize that you can get those benefits or the input tax credit on that. Depreciation, which I think is very standard, if you are charging depreciation to your books, that is automatically reducing the profitability. And of course, then you're paying lower taxes on it. And I think another thing, which I think is a smaller point and may not be applicable to everyone, but if you have any assets in your business, after depreciation, after write-off, whatever it is, you're still selling them. Especially after depreciation, not write-off. You can still sell them. So if you have an old laptop, which is let's say 5 or 6 years old, but it's part of your business, even after depreciation and you sell it, you can still make a loss, a short-term loss, which you can then carry forward, or a long-term loss, which you can carry forward. I mean, I think these are small things that you need to consider and probably consult with your CA, on these smaller aspects in terms of how to maximize deductions. Having said that, though, I do want to mention one thing here that, uh, you know, I think we experience this with our clients as well. There are a lot of businesses that want to maximize deductions. That is fine, but a lot of people then want to cross over and actually start evading taxes by doing by undertaking certain transactions which are questionable, and of course doing things in cash. So I just wanted to throw some statistics here, to kind of put this in perspective, that India's tax to GDP ratio is fairly low. It's about 17%. And between 2007 and 2017, our GDP doubled, but our tax to GDP ratio was the same. So, when you say the GDP doubled, you also know that the economy became more and more formalized. There were more and more people who came into the tax bracket, but somehow the tax to GDP ratio has stayed the same. And you know our fiscal deficit continues to be high for the government. And I think when you talk about things like government spending, India's government spending as a percentage of GDP is close to 13%. In countries like South Korea, it's about 32%. In Germany, it's about 44%. So our government is seriously underfinanced in that sense. So when you think of how short the government is on revenues, and how they can come after you for tricky accounting or questionable accounting, you need to consider that in terms of whoever is giving you the advice, that maybe you have a short term benefit, but in the long run there are serious costs associated with you know very broadly speaking, tax evasion. um, with that, I think I just want to close off in terms of giving a perspective on the tech side of accounting. And the reason I want to bring this up is because there's been a huge change as far as the accounting industry globally is concerned. Everything's moved to the cloud, and so has accounting. With the benefit of a lot of accounting SaaS solutions coming, there are a lot of integrations. So you can't possibly expect one accounting software to address all queries for all types of businesses. That would make it very difficult, and then, frankly, there is no accounting software that does that. But with the benefit of being on the cloud and integrations, you can now, even as a small business owner, think of compiling apps that can get integrated, and then having a solution that actually works for you. Of course, like all other industries, there is a sense of artificial intelligence and machine learning coming into accounting. So if you actually use cloud accounting softwares, they sync directly with your bank statements, which is fine. But the benefit is that sometimes they can actually guess what a transaction might be. They will still need human approval, but I think these are probably the first steps, towards AI and machine learning. I speak very broadly, of course. And I think one of the things that you need to consider, and this is probably the last few points, is that why it's unrealistic to rely wholly and solely on the CA to give you guidance on accounting. One is that managerial accounting is too plain vanilla. I think the CAs are seriously burdened. Just to give you a statistic, which I use very often, is that there are 6.6 crore tax filers in the country, and only 1.5 lakh practicing CAs. So there is a huge burden on their time. And because that time is really important, they are firefighting constantly. So they may not have the bandwidth to sit and give you time and then give you a perspective on what's actually happening in your business. They can help you with the taxation, they can help you with the deductions, they can help you understand or give you some sort of idea about the compliances, but for them to take that time out and really understand the metrics of your business would be a serious cost to you, because time is money, and if they're going to give you that time, they're going to charge you accordingly as well. I think with that, I would like to understand, if there are any questions that I could answer. I've been going on and on, but if there are any questions, I would be happy to really answer them right now. Any questions that I can answer? I don't see any questions coming in. So I think someone's asked if it's okay to continue preparing invoices on paper. Uh, I suppose that's fine. A lot of businesses tend to use bill books and so on and so forth and prepare it on paper and then just do the data entry. Some businesses might actually require it. We actually have a lot of businesses who go for exhibitions, and sometimes when they go for exhibitions, the only way out is to quickly prepare an invoice on paper and hand it over. So of course, it's absolutely fine. Maybe preparing more organized invoices is more for a B2B sale. But if you are doing B2C, as long as you're accounting for it, there really should not be a problem. As long as you're maintaining the serial numbers and so on and so forth, there really should not be a problem. It's not mandated that you need to have electronic invoices and so on and so forth. Um, I think, as far as tools for outsourcing and trading for micro SME, I think is a very, broad sort of question. I think there are a lot of, if you're talking about accounting outsourcing, of course, there are a lot of firms who do that for you. It's not necessary, I think the key here is not, in terms of whether someone can do it for you. There are plenty of people who can do it for you. I think the key here is in terms of the tools they're using. So like I said, cloud accounting software, so that the any accountant doesn't actually have to come to your office. Platforms to actually share the data. So, for example, for us as an accounting outsources accounting services firm, we encourage our clients to share their data through email, through WhatsApp, through our own platform, through Google, through Dropbox, through OneDrive. Whatever works for them. Um, and so I think you really need to delve into the details. I think the devil is always in the details. So yeah, I think you really need to understand that how efficient any accounting service partner you have actually is. Yeah, um, any other questions? Someone mentioned Zoho for payroll. Yeah, so there is an app that's called Zoho Payroll. um, I don't know if I remember the prices correctly, but I think it's about 50 rupees per employee per month. But I think when you're a smaller team, these are things that you can definitely consider if it eases your pain. Um, of course, I don't know about the latest pricing. Yeah. So, do you recommend Tally for a small business with less than 20 lakhs? Um, I think it's not necessarily about the sales turnover. I think the sales turnover is immaterial in some ways. I think it really depends on the kind of business you have. And so, for example, if you are a manufacturing firm where you need to record your production process, maybe Tally is good for you. But if you are a digital marketing services company, or you're an e-commerce retailer, maybe a cloud accounting software like QuickBooks or even Zoho is probably good for you. So it really depends. Even with a 20 lakh turnover, do you have a full-time accountant? If you don't have a full-time accountant, and you're actually outsourcing the accounting, it's better for you to get it done through cloud accounting than have it on a desktop accounting software like Tally. Unfortunately, Tally is still not on cloud. I don't know why they're still not on cloud, because, like I said, they're 80% of the market. But it does lead to inefficiencies when you don't have a in-house accountant. So in this case, then a cloud accountant would probably be better for you. Um, for which third party app you can use to access your Tally data, we use BizAnalyst works fine. We use BizAnalyst for our clients, but there are other third party mobile apps like FlowBiz and so on and so forth. So yeah, you can try that, and if there are any questions, you can obviously follow up with us, and we'd be happy to guide you on that as well. um, um, a little difficult to answer, how you can outsource, for products. That is a little out of our purview, especially for today. So, unfortunately, I don't think, we can help you with that. Um, if there are any other questions. I think, if the CA is busy, in terms of not helping you out, as an entrepreneur, it's your job to help yourself. As simple as that. So, like I mentioned, earlier, during the session, as well as in the Q&A right now, there are plenty of options in terms of how you get your accounting done. You can get a freelance accountant to come and do data entry for you in the office, or you can outsource it to any accounting services firm. But the key is to maintain that data correctly and meticulously and errorlessly. And I think that is where you need to keep following up with your accountant. At first, it will seem a little difficult. But I think once the accountant realizes how serious you are about maintaining your data, they will come around. So try. I think the key metric here that you can look at whether accountant is actually working for you or not is how much time you're spending coordinating between the accountant and the CA. Because we've been there in the past as well. When you have freelance accountants, and if your main job becomes a job of coordinating between the CA and the accountant, then that accountant is not very good. But an accountant who can help himself and then help you is means that you're probably on the right track as far as having a good resource is concerned. So I think, you know if you are, whether even if you're on the social services sector, where you are handling CSR funds and so on and so forth, it becomes even more important to actually maintain your books of accounts, so that you can present it to corporates, to multilateral agencies, like the UN and so on and so forth. So, again, you need to ensure that whoever you have on board actually understands what you're doing, understands the kind of business you're doing, um, and maintains the book in as detailed a manner as possible. Even if that requires, maybe sometimes when it comes to accounting, one data entry might actually require you to make 5 data entries or 2 data entries, related to that. But the books should be maintained in such a way that when you, as an entrepreneur with possibly no accounting background or no finance background, actually, you can still understand what the accountant has actually done, and you don't really need to, ask him or her any questions, because you can actually see the links in terms of what has actually happened, and track, how each transaction was actually accounted for in your software. I think with that, I think we're done with the session today. Of course, if there are any more follow-up questions, we'd be really happy for you to ask them on the WEP community platform. Like I said, we keep regularly scouring through those questions, and whatever is applicable to us, we are more than happy to help, the community members out. And Yeah, so if there are any questions, please feel free to address it or ask them through the WP platform, and we'll be happy to get back to you. Of course, we'll be sharing an infographic of some of the metrics that were discussed today, and maybe you can check that out on the WP platform possibly by Tuesday. I think that would be yeah. I think that's probably viable. By Tuesday, we should have those metrics out for you. I think with that, I'm going to close this session, and thank you today for taking the time out, coming in, and it was great addressing this audience. Thank you.